Now, when you start to look at some of the other statistics, like Bitcoin's held by strong hands, what you can see is that over the last couple of months, pretty much since like the middle of May, we've seen these strong hands continue to buy up Bitcoin. You can see with the green arrows there, you can see that there's more and more Bitcoin that is going into the strong hands. All of the selling, for the most part, over the last couple of months has been from new market entrants, people who have been around for 6 months or less holding those Bitcoin. And so what we got were new market entrants that were buying Bitcoin in the last 6 months and then turning around and selling it again. The strong hands continue to accumulate, though. And what we know is that the strong hands, part of the reason why they're considered strong hands is because when they get the Bitcoin, they don't turn around and they sell it. They hold it. They contribute to the supply shock. They take supply off of the exchanges. And then when new demand comes in, that ends up leading to this kind of price shock. And so we also have historical context for this. If we go back to 2013, Jeff Ross, founder and CEO of Vale Shear Capital, had this quote talking about 2013 where he said, quote, "Following a troubling 3 months of news and price action, Bitcoin went on to print 5 green monthly candles in a row and went up about 10x in the second half of 2013. Now, past performance is not an indicator of future performance, and we by no means contribute at all financial advice. But what we do think is interesting is that history sometimes rhymes. And so Jeff here was pointing out the fact that after 3 months of news and price action that was troubling, Bitcoin had 5 green monthly candles and went up about 10x in the second half of 2013. Well, we can look at a chart, and he provided this chart along with it. And what you see is that there are a succession of green monthly candles in 2013. And then if you look in 2021, we see again a succession of monthly green candles. Now, we do not know what is going to happen in the future, but what we can do is we can look to the past to try to get a better sense for what we're seeing now. Anybody who invests in finance, whether it is in the stock market, in Bitcoin, or in any other assets, will tell you that being a student of history will provide incredible foundation of knowledge to understand what is happening today and what is potentially going to happen in the future. But there is no guarantee, but a very, very interesting data point here. And so then if we go and we look at 2 more charts that basically show us the amount of Bitcoin that is actually on the exchanges. Remember, if it's dropping, if there's less and less Bitcoin on the exchanges, then it means that it is less likely that the price can stay at the current level if demand increases. And so we can see here from yellowblock.io that the supply on the far right side here, you can see the supply of Bitcoin on exchanges continues to drop. It's the lowest it's been in about 2 years. And so another data point showing not only is there an increasing amount of Bitcoin in the illiquid entities, but also the supply on the exchanges itself continues to drop. And if we zoom out even further in the second chart, what you can see is you can actually see over a long period of time, we are at one of, if not the lowest levels of the supply on exchanges. So if all of a sudden we see an increase in demand, that could come from a whole different host of events. It could be because there's more monetary policy or fiscal policy decisions that are made that make people worried about higher levels of inflation. They want to go find a store value asset. There may be things around censorship or some sort of government overreach that make them want to hold a censorship-resistant asset. It could be things outside of the United States that drive adoption, like a country like El Salvador going ahead and making it legal tender. Or it could be a multitude of other reasons, including simply just pure speculation, where Wall Street firms or other investment firms believe the value is going to go up in the future because of some of the data that we're showing here, and therefore decide to start buying. And it's almost a self-fulfilling prophecy because their increase in demand and large dollars ends up driving the price up. Regardless of what the increase in demand could be. Again, we're not saying it's going to happen, but if it does happen, there is likely to be a price increase given the fact that the supply continues to draw down, the amount of Bitcoin on exchanges continues to draw down, and more strong hands are getting their hands, pun intended, on Bitcoin so that they can hold it. And so when you start to look at this, this is all happening at the exact same time that miners were kicked out of China. China made the decision to go ahead and say, you know what, we aren't as cool with this industry. And so over the last few months, as China went ahead and put kind of a more serious ban in place and really started to act on it, what we saw was the hash rate of Bitcoin completely fall off a cliff. There was almost a 50% reduction, give or take, in the actual hash rate. And so you can see that we had pretty much been trending up since 2019, the bottoming of that hash rate on up. And Bitcoin is the most powerful computer network in the world. It's the most secure computer network in the world. It has more computing power directed towards it than any other computer network in the world. That is true both at the top there, kind of early 2021, and also after a 50% decline. Now, we saw that there was a bottoming out a week or two ago, and now we've started to rapidly come back. And so we today sit with a hash rate at about the October 2020 low. So if you were to take a line and draw it from where we are today back, you would hit the low that we hit in October 2020. Not bad given the fact that one of the largest countries in the world kicked out a very high percentage of hash rate from their country, right? We're only set back about 8 months or so, give or take. And so what we see is the Bitcoin supply continues to operate exactly how it is. 21 million Bitcoin. We continue to put 900 Bitcoin a day into the actual circulating supply. But the addressable circulating supply, the supply available for buying and selling on exchanges, continues to shrink. The hash rate has now bottomed and continued to recover. And what I think this is laying out is a very, very attractive underlying fundamentals that suggest if demand continues to increase in the future, given the macro environment, speculation, and other types of drivers of demand, the price is likely to continue, which means that the bull market is still intact. Joe and John, you two are both Bitcoin bulls as well. How do you guys look at this data? What do you think that it's telling us when you start to kind of unpack some of the supply squeeze thesis, and then also the hash rate?
Yeah, for me, I think a lot of the metrics, especially on chain and stuff, can get confusing at times. But when you just think about it in the context of supply and demand, it makes a whole lot more sense, right? So there's 50 to 60% of Bitcoin haven't moved in a year. The illiquid supply on the exchanges has drastically increased over time. There's less Bitcoin available. So when you look at it, the fundamentals, exactly what you just said, it suggests that the bull run isn't over. And when you overlay it, when you're looking at 2013 and 2017, it's very, very, very similar in context. And it suggests that we're going higher than 60. Just any kind of increase in demand, it could be anything that you mentioned previously, but any kind of shock on the demand side is going to drastically increase price, just given the supply that's currently available on exchanges.
The other piece of this that is really interesting is who's buying it. So we can see here the strong hands. It's not so much just the supply is drawing down, like the kind of liquid supply or the addressable supply, but it's also the people who are going to hold this stuff, hold the Bitcoin, historically have shown a high propensity for not selling. They are strong hands. And so when, John, I think you looked up the statistics, it's like 56% of Bitcoin hasn't moved in the last 12 months. Even though Bitcoin went from 10,000 to 60, back down to 30, and now sits at 40, more than 50% of Bitcoin holders aren't selling. They're not moving the Bitcoin.
Yeah, it's also important to mention who's buying it, right? So as we saw a bunch of institutions come in, they have larger wallets, whales, all those people. It's really important to see that, like, look, as a company, you don't want to take if it goes from 60 to 30,000, you can't take a loss, right? Or do you sell it and kind of hedge out your loss?
So this is a wild stat. 10% of Bitcoin supply hasn't moved in a decade.
10%?
That was as of December 18th, 2020, so it's a little outdated now. Given kind of the increase in supply. But as of the end of last year, 1.85 million Bitcoin hadn't moved in a decade.
So that is impressive. Do we know, does it include Satoshi's coins? I think Satoshi's wallet has about 800,000 Bitcoin in it. And, you know, Satoshi ain't showing their face. And they're not moving any coins. So if that includes the Satoshi wallet, it's about 1 million Bitcoin outside of Satoshi, right, that haven't moved in over a decade, which is still incredible, right, in terms of how much Bitcoin has not moved in that long period. I mean, we're talking about from literally pennies to today at, tens of thousands of dollars.
One thing that's, I guess, important that I'm asking you is if he ever moved his coins, right, the price would just drop basically like overnight, right? Almost like a rug pull if he ever decided to sell some of his
I don't
coins.
think so. If Satoshi ended up moving the Bitcoin in the wallet, I think that there would be a price drop like immediately, but I think it would recover pretty quickly. And it would be more the surprise rather than the action. But I don't think that Satoshi moving the coins would really matter that much in terms of the long-term health of the network. On top of that, I don't think that it really matters who Satoshi is at this point. I think there's a huge advantage to the fact we don't know who Satoshi is, but if we somehow found out who it was, I don't think anyone is going to sell their Bitcoin because of who it is, or they're going to go buy Bitcoin because of who it is, including if it was anyone from an individual, an organization, a nation state, or anyone else. I think that the idea of Bitcoin, the fact that it is decentralized, that it's not controlled by anyone, that it has a programmatic, transparent monetary policy, is unlikely to be kind of inferior to the fact of who the founder is 12, 13 years later.
Yeah, well, when you start to think about it in the context of what are the estimates? It's like 3.5 to 4 million Bitcoin are lost forever, they think. So that's 15 to 20% of current supply. Add that on top of ones that haven't moved in a decade, or the 50% that haven't moved in a year, and you start to think about it from a supply perspective, it's pretty enticing. Is the word I would use.
I mean, this was the thesis in 2019 going into 2020, was basically there was going to be a supply shock, not a supply squeeze, a supply shock. And the shock was that we were going to get the Bitcoin halving in May of 2020. We're going to go from 1,800 Bitcoin a day to 900 Bitcoin. You're going to have at least the same demand, right? We ended up actually getting an explosion of demand because of the macro environment. And that led to this massive price increase from 8,000. Think about that, from 8,000 to $64,000 from the halving until the top in March, April timeframe, or May, or whenever it was. And then we came back down to 30, right? And now back to 40.
I thought the halving was priced in.
Well, there are some people who believe that the halving is priced in. As we know, one of the greatest scams in the financial system is the market efficiency hypothesis, or the efficient market hypothesis, which basically believes that the market is an efficient tool because everyone has access to the same information. Now, you would have to believe, one, the market is efficient, which it is not, and two, you would have to believe that everyone has access to the same information, and three, you would also have to believe that everyone who has access to the same information comes to the same conclusion of that information. And so there are many people who hold Bitcoin today who don't even know what the halving is. They couldn't explain what the halving is. They couldn't tell you what the impact historically of the halving has been, nor could they even tell you what the incoming daily supply of Bitcoin was before or after the halving. And so therefore, it is impossible for it to be priced in because all of the participants in the market are not acting on the same information, nor are they ingesting the information coming to the same conclusion either. So from a basic definition, the efficient market hypothesis is invalid. And also, there is 0% chance that people can believe the halvings are priced in because everyone doesn't know about it. So if everyone
you could also just look at the charts and see what it's done after every halving price-wise. That would be pretty easy.
Well, but you know that you're just historically saying that you have hindsight bias. That's why it happened. Okay. It's not because of the halving. It's because something else happened. It's going to happen next time too. Yeah. I mean, do we think that there's always going to be this massive impact of the halving? I definitely think there will always be a positive impact because you have a supply shock. Yeah. You can't have a supply shock and have zero impact in the market. That's not how markets work, right? Supply, demand. If you cut the supply in half and demand stays the same, even just staying the same, the price is going to continue to increase. If demand increases, which historically it has, over time post the shock, then the price will drastically increase, which is exactly what we saw play out here.